Thanks, John and Rob, for great presentations, as always, tonight. My question was, I just wanted to see if I could get a comment on this sort of disconnect between the American equity market and the Canadian equity market. And the Canadian economy seems to be strong, but the market doesn't seem to reflect that. And secondly, so if you were to choose between American equities or Canadian equities in the near term, what would you comment on that?
So we did this presentation in Toronto, and they made me cut back on some of the material because I had a slide that explained why
I'm so sad.
Why the Canadian market underperformed. And so there were a number of factors. One is that if you look at the composition of the Canadian stock market, it's heavily weighted by financial and energy. And in the financials, in particular the banks, there are concerns on the consumer debt and housing that has weighed on the performance of our banks. The other thing on energy, we talk about pipelines. It's the fact that our energy companies have not benefited from the rebound in the price of oil. The other thing is if you look at what worked well in the US, technology did very well. Well, the technology sector in Canada is very small. A concern in the Canadian market has been NAFTA. Well, that's been unwound, but that weighed on the market as well. And the other thing is, what helped the US market was tax reform, and the idea that they were going to get tax reform, corporate tax reform, it would increase earnings. In Canada, we have the opposite.
We had reverse tax reform.
We have, yeah. If we look on balance, there's probably a bit of a catch-up for the Canadian market, and I think you're starting to see that. But a lot of that, and from a valuation point of view, I think the Canadian market is not as expensive. And I think in a market correction, the Canadian market, could outperform.
I think there's one other thing to think about, which Canadians don't think about, but let's imagine you were European, and you live in Holland. You wouldn't be thinking, why isn't Holland doing as well as the overall European stock markets when they're blended? The US is a continent. It's not a country, really. And so you're talking about something 12 times the size, at least, of our economy. So from that framework perspective, you could make a case that if you were equally balanced, you'd be something like 85% from an equity perspective in relation to North American equities in the US and 15% in Canada, just looking at the size of the economy. Of course, Canadians don't do that generally, so I think it's important maybe to think of it from a different framework. What would be the appropriate asset allocation given where the opportunities lie and what the size of the economy is and how many companies there are, regardless of the industries that they're in. And then look at it from that perspective, and then that comparison becomes a bit less interesting between, if one country in the European Union is doing poorly, if you are equally weighted in the entire continent, it's probably nothing that you actually care about.